We just keep riding the line over and over again here on the S&P 500. The futures, what I don't really like is how we're just forming these tests over and over and over again. In my opinion, they're getting tighter and tighter, which is not really what you want to see. You want the space, the gap to come back down, the space come back down over and over again. And when it starts getting tighter and tighter in here, you're setting up. Now the question is, are you really setting up for some kind of breakout, or are you setting up to roll? Now, obviously with the Fed coming out on Wednesday, you're gonna have a lot of bets either way, but there are some signs. One of the core things that we look at is breadth, and we're going to go through the names that are rocking after hours and the ones that are not, and what the difference is, because there's a big difference. But what we're seeing here, and especially with the sectors, we're not really changing. I mean, the stocks above the 5, the 20, the 50, and the 200, we went over this on Saturday, but just to recap, they're rolling. Less stocks are above their 5-day moving average. They're 20. You broke this, and this is pretty much a cardinal roll. If you're below the 50-day moving average and you're 50% below, you're waiting for a pullback. That's a pretty telltale sign, and they all are sitting there at these levels. So the breadth is getting worse. Now, it's very different with the NASDAQ. We can see that, and we're going to talk about why. In front of us is QQQE, which is the equal weight of the NASDAQ. And this is RSP, which is the equal weight of the S&P 500. But wait, there's more. If we take a look at this and go back to, let's just say, August for a second, on a 15-minute chart, we can see the breakout here. And of course, you could just kind of go down the line and see the breakout here as well. Now, why is this important? This is important because the equal weight of the NASDAQ is outperforming the equal weight of the S&P. The S&P looks awful. So on the equal weight side, so is this something we need to pay attention to? It is. But when we start going out on this a little further, and I'll clean off these lines, this is really significant. So you're going to just want to follow along for a sec here. I really don't think people get this. So just pay attention to this part. See this neckline right here on the hourly? And you can see how far back from 24 to 25 that we're going. And you can see when we've had these rallies, how it led and what happened to the market. If you overlay the NASDAQ with these rallies on an equal weight basis, you're going to see something. Watch when we go to a 4-hour and then a daily. Now, here you are on a 4-hour chart, and you can see this level, how it was resistance and support, resistance flips to support, retest, support. Now, if you go back and look at these spots where it became support and then lifted, like the end of October 30th, 2023, and so what happened to the market, where you come here and you start looking at these days like end of May and go and look at what happened to the market. The breadth of the NASDAQ over the breadth of the S&P on a relative basis, not absolute, is significant. And when you see this, you want to be involved in tech. Watch this on a daily. Now, when you look at these breakouts, obviously you have the pandemic here, but you start to see that outperformance even into the pandemic, how they were just buying tech over everything else, and you have that outperformance. Underperformance comes from the exact opposite. And then when you start to flip, you can see how that would act. You could actually look at this undercut and then just take an RSI to it, and then you would actually even see a positive divergence on that would mark that this relative performance is coming to an end. This is the kind of stuff that you want to pay attention to, because when you see it, you can't really unsee it, and it tells you a story, and you want to pay attention to that. And while it's a smaller scale right here, the equal weight balance is really what you're looking for. So you can all see that positive divergence right here, and you can see how that marked that bottom. And then what happened to the market from there, was it just absolutely ripped? And what you're getting here is you're getting a smaller one, but it's there. And when you see this stuff, obviously, where you're taking out that lower low, and even if you took that lower low and just said, well, do the undercut and come across, you're there. So this is telling you very clearly what we're going to see is we're going to see outperformance on an equal weight basis of the NASDAQ versus the S&P. Now, what it's telling you is on an equal weight basis, and then it's telling you not only on an equal weight basis, but on a relative basis, not an absolute basis. So understand, they can both drop, but if they do, the NASDAQ is telling you that it will outperform. And it's very rare for the NASDAQ to put itself in a position where that's not leading. In other words, that you're not seeing like a net delta, you're not seeing it go up. And this leads us to the next part, that people are really having a tough noodle. They're not really getting this, and they keep waiting for these pullbacks that they're just simply not getting. All of a sudden, after the election, you had an area here where, let's just take the ATR, or average true range of this name, was $10, meaning that every day maybe it was going to move $10. And then even before then, you look at the beginning, you were sitting here and you were going to get $6. And this is really important to get, because if you were trading Tesla back here when it's in twos, and I get it, it's a higher price point, but the volatility is way over what the price point is. So when you're back here and you've been getting $8 moves, well, now you're getting 3x that, okay? And now you're getting 3x moves, and people are wondering why they're getting stopped out all the time. You need to start checking the ATR on your names and expecting those kinds of moves to happen. What I tend to do with people and try to get them to understand is the majority of stops that I put in place for trades are really predicated upon volatility, not just where they are on a chart, but I tend to use volatility stops. I got it from Richard Dennis a long time ago, and it does work for me in my style of trading and understanding that things are going to be a little more volatile. And if you were trading this, you should understand that the volatility is basically 2-3x what it was about 60 days ago. So you want to see these names and you want to stay in them, you want to trade them, but you have to understand that you have to look at this and go, okay, well, if that's the case, for example, watch this on like a 5 or a 15, you have to understand that every 15-minute bar when you're up here could be $6, and that doesn't mean your trade's busted. Or every bar here when you open on the day could be $4 that day. And it doesn't mean, again, that your trade's busted. It just means that you could be in a $4 range per 15-minute bar. Understanding that puts you in a much better position to trade, and then you can understand why the probability of tests back to closing prices are realistic. Here, watch this for a second, what we did today. One of the most critical things to focus on is knowing exactly where your levels are and understanding the ATR, average true range. I'm going to get into this on the ATR in a greater detail, but just by looking at this screenshot, you can see up here, we were at that 448 level and you came all the way back down to that previous close. And just a real quick tip, start measuring off your open, high, low close, because you're watching these tests over and over again, and they're giving you great little entry areas. We had a nice trade off this pre-market, and then also just rallying it out into this, and then got out of the way. Actually bought once here, failed, bought back in again the second time. You know, if the first time doesn't go, second time's a charm, and then as long as the trigger's there, I just keep firing into it. But again, that's just the way that I trade. But this gave us a really clean entry. We got in, and then my target was to get back to this level. But I don't tell the stock where it's going to stop. What I do is I use those levels, and then I make a more informed decision. Let me show you what I mean by that. So I'm trimming out as it's going up. I'm assuming that it's going to fail, just like it did here. Maybe it's going to reject this bar or this. So I'm trimming a portion out. When it gets up here, I'm watching that retest right here. Never got to that retest, goes back up to the top, never makes the lower low, flips, and then goes. So as I'm deciding what to do with the portion that I've decided to leave on for the day, I'm just letting it play itself out. I'm not telling it what it's going to do. And you can see that within 18 minutes, we've gone from that level all the way back up. And so the secondary trade that we did after the first long actually added more value. Now, we've had calls on this. We have the 500 calls to end of the year. And we've had some bunch of other trades in it. I'm sure a lot of other people have. It's just been a monster. But the point of this is I'm up one full ATR, the average true range, from that low. So off this trade, we're in around the 38-ish level, and I'm looking at this, and the ATR is roughly 18. I'm up that on the trade, which is kind of insane in a short period of time, so I'm just putting that out there, meaning that this is pretty much the measured move that you should expect, and then from there, it might get a little wonky, and you'll see that. And so when it starts getting wonky up here, I get this little move down, and I'm up $19, and I just take it, I get out of the way. I don't need the last dollar. I can always get back in a trade. Now, if you have a smaller account and you're worried about the PDT rules, there's different ways around that, and I can actually do a whole video on that. Maybe it's a good idea if I do. But I don't need the last dollar. If I start hitting these lows and I start having closes like this, undercuts, that's enough. I don't need to be around for that long bar down. And it's not a question of, is it done, but is it going to do something like this that's going to kick me out? And that's what I need to pay attention to. Now, recording this after hours, we did one other trade right at the end of the day on it, where it was at 62 and it's pushing after hours. And we'll get to that and how to spot these things in the last 10 minutes. But this is what it looks like when you're completely thought out and understand where your levels are. You're watching how they're acting. What we're doing is we're determining what the range is going to be, which was already established early on. We're determining where that extended range could be by the ATR. And then we're just letting it play out. We're not telling it what it's going to do. It's telling us, and we're just capturing as much of the move as we can. Here, watch this play out live. 436 was the level, right? Isn't this where we're supposed to be looking at it and seeing for a bounce? Is that why we're getting wicks? Because you're getting ready to bounce? Do we cheat it and buy it ahead of that? Do we cheat it and buy it ahead of the bounce? Because once it gets the bounce, that's it. I think we do. I think we buy it. Let's see what it does. Nope, no roll. I think I'm early here, way too early. I tried to cheat it. I think I'm just cheating myself. Although I got this doji here, but it's not working. Nope, cut it. Tried to cheat it, but it's not gonna work. You're gonna undercut and go from there. Everything just dumped. I think you're gonna hold. Gonna add back and then use that as my stop. It was just early. That's nice. I got that, which is good. I should pull something out. It's a quick $2. Nice knowing where these levels are, isn't it? Makes your life so easy. If you could just touch that open, that'd be awesome. Trimmed right into the open. Up 3. Let's watch that PM high. That'll be my next level. Rest is at break even. If it goes back to the high, I'll kick it, because I'll be up like $7-8. On that, as much as I'm going to be out of Tesla, the rest is break even, which is down here. If you're day trading and you're in from here and you're trying not to go back to the break even, you would use this level right here. So you're over. I'd like to sell the rest at the high if I can, because that would mean I bought the low and now I'm selling at the high. That would make me happy. Now, to reiterate, we're not telling it what it's going to do. And I have another setup here I just want to show after hours. We're just letting it do what it's going to do. So when we start to see this, see, what we don't want to do is be in this position. You're saying, oh, well, look where it is after hours. Well, your operating system has a buy button, so you're allowed to buy stocks back. There's no takesy-backsies, so you can keep doing it. So this idea that I want to be in this and deal with this and then hoping and praying is not a strategy to me. I don't want to be in for these dips that you're going to start seeing as the increased volatility. I want to be getting out into positive slippage as much as possible, not negative slippage. Okay, and so that allows me to go out there and then when I see this stuff, put in bottoms and see if I could buy this when they're doing these liquidity grabs, right? But what you're always looking for, especially at the end of the day, once we turned, when you watch that live, let me go back and get to exactly what I want to get to first, because there's 3 things I want to point out here. Number 1, I'm not telling it what it's going to do down here. I'm setting my target and then I'm allowing them to tell me that I'm right or wrong. It flips it up, down, test, goes higher, keeps making higher highs, and then eventually I get a signal and I take that signal. You never know, but what I will say is that when you get to those ATR levels, it's kind of interesting that, that's where you fought all day until the end of the day. Now, at the end of the day, what we did was we have the liquidity grab, which you see, and 350 is when all the market on close orders come in. Now, whether or not you know this, whether or not you're paying attention to this, the important thing about it is market on close orders, they're confirmed at 350. So they're locked in. There's no, oh, we want to do over. No, you said you were going to buy or sell. That's what happens. That way you're guaranteed that market on close, right? That's what you're getting, market on close. Got it? Okay. Now, why this is important, because once you get it, you get it. So what does this mean for us? What should we be taking from this? Well, once you see this liquidity grab, tries to rally, here's your control bar, can't get over, pulls back, right, 352. Here's your control bar, 342, 348, 350. All of a sudden, what happens? You flip the control bar right here, and then you're just looking for these patterns. 3-bar patterns, 1, 2, 3. So I'm able to buy that here, and then all I have to do is just use this as my stop into the close. And it presented a nice opportunity. I took it. I didn't hold it after hours. I bought it again after hours once it flipped. And all you're doing is watching these levels and watching, is it going to flip? Remember, wicks are what? Price rejection. Flips, retests, that's it. And now you're pushing after hours. So there were 3 other trades today that were in this from just this one trade we did off the open. One failed, and then the others are working very nicely. But it's not always going to be like this, right? Because people would say, well, why don't you just buy here and hold? Well, why don't you just give me tomorrow's lottery numbers? Like, you can tell me that you know what's going to happen, but you have no idea what's going to happen. You don't have a clue. Neither do I. So you have to build processes around this. And then when you're building those processes, you go from there. People will say, oh, well, I'll just hold because I like the company. That's fine. But you can run into a situation where you like the company like MicroStrategies, and all of a sudden in this kind of environment, you're down $30, $40 because somebody sneezed. Nothing else happened. And if you're willing to do that and say, I'm special, then that's on you. I'm not special. I know what my deficiencies are, and I know that I need to lock in profits and move my stops up, and I know I need to get out when the getting's good, and 25 years has taught me that. So I'll keep using my setups and keep going from there, locking it in and going again and again and again, especially with what we have coming out. But I got asked a lot to walk through this trade, so I wanted to do that. If this is helpful, let me know, and I'll do more of these kinds of snapshots. Now, one of the other things that we're seeing here is we're seeing rotation. And I think this is important, and it shows why we're seeing what we're seeing, where we're seeing it. And let me just make this a little brighter. I'm not going to have time to edit this. Boom, I know you guys love when I say that. Let's make this super, let's get something a little brighter. Maybe we'll do that. There we go. Can't miss it now, can we? So what we want to do with these lines is say, okay, how did the day play out, and what was above or below our demarcation line? Our demarcation line in this case is not rocket science. It's above 0 or below 0, and that's what we're using. And what I want to point out is our defensive names are really what's breaking down here. We're seeing energy collapse. Now, energy is collapsing for a bunch of reasons. Drill, baby, drill. China is growing nowhere near what they said they were. We could do a whole video on that alone. They're blowing out of healthcare, utilities, and staples, and XLRE. That's selling off for another reason. I could do another video on that. But nonetheless, they have some issues here with just obviously with interest rates and how that's going to play out. But what we're seeing is we're selling the defensive stuff and we're buying risk. We're selling the defensive stuff and we're buying risk. So when we look at the market and we see the S&P coming down and we see that from an equal weight perspective, we have to understand what that means. And here's a great way to look at it. In front of us is the SPY divided by RSP. So you're taking the SPY market weight and then you're taking equal weight and you're looking at how this is playing out. And what you're seeing is a breakout, and that breakout took place on December 4th. So what this is telling us is, yes, we want to buy the S&P and we want to buy certain sectors, but we don't want to buy the equal weight because we don't want to be in the sectors that they're blowing out of. And I want to be really clear about this. They are putting risk on even though the S&P is dropping. And so when you look at the S&P versus the RSP, you can see them putting on risk. They're selling the equal weight and they're buying the market weight. They're buying the bigger companies. It might not seem that way. And remember, this is relative. This is relative positioning, not absolute. And that's really important to get. Watch this when you go out on an hourly. To me, it's fascinating because you go out to August and see how we've been bonking around and now you're breaking out and now they're buying the market weight. But what's important about this to me is when you look at these breakouts, the real breakouts and the real peaks of this determine the highs of the market. And then that's when you'd want to buy the defensive names when this inversed. But if you look throughout history, like here we are in that November 13th, well, they bought everything and we broadened out there. We're not broadening out, we're getting tighter. Is that good? Is it bad? It doesn't matter. It is what it is. But what they're doing is they're going after certain sectors. So when we look at the market today and we look at something like XLY on the hourly, well, you'd have to tell it that it was having a bad day or that November has been awful for the XLY, or you look at XLK or you look at XLC. It's not really bad, right? They're just rocking and rolling. Where we look at XLV or XLP, right, or XLU, and they're just collapsing. And why? Even if we go look at XLRA, why? Well, you have interest rates that we're going to have to deal with, and we're going to cover that in another video. But we know that they're not going to cut as much. We already saw that, right? We all know that they're not going to cut anywhere near what we think they're going to. So that is going to present an issue for us. But what we really want to focus on, in my opinion, is where are they putting the money? And I think that is very clear what they're doing. It's very clear that it's risk on. You saw it with Apple today. Let's go to these candlesticks again for a second, and let's drop back to a daily chart. And we're seeing it over and over and over again, forms a top, pulls back, again and again and again. But what I don't like is this. Now, obviously, everyone's going to like that Microsoft setting up here. And what's interesting about Microsoft and what you should like about it is this. Microsoft in and of itself is mimicking that entire move. So this is where I'm going with this. When you find something that mimics it, you use that as the vehicle in order to trade. When you find something that mimics it, you use that as the vehicle to trade. Let me give you an example of what I'm saying there, since I said it twice on purpose. And what I'm showing is if we look at the S&P and the RSP combined, they're mimicking one another. So when the S&P is rallying, Microsoft's leading. And it's not like that for every large cap name. They're not all doing it. So I would suggest that this may be something that you may want to use as a vehicle to do this kind of trade. It's up to you what you do, but I certainly think it's worth paying attention to. I love these correlations and I find them fascinating. Now, why Microsoft is the proxy, I don't know. If you see a better proxy, let me know. It's not all the Mag 7, that's for sure. But I thought this was pretty interesting that it mimicked it and had such a high correlation to it. I do want to wrap up with something that I'm not really crazy about. There's two things. Number one, if we start looking at the steel names and how they're collapsing, that does not bode well for growth, global GDP at all, nor does XLB. And what we're not really focused on and what people are not really paying attention to at all is that global GDP the estimates seem to be in a little bit of trouble because of what's going on with the uncertainty going on in China right now. We can all look at A shares and see how that is acting. Every time they come out and say they're going to do something, we're just watching the A shares, which is mainland China, and they are dumping the stocks. It's funny, when I have people in the room, we have 40 different countries in the room, and people always say to me, oh, you don't like China. I'm like, no, I'll trust China when mainland Chinese trust the stock market. Until then, we have Golden Week, they couldn't get out fast enough. Then we had some infusion of capital, they couldn't get out fast enough. Once again, infusion of capital, they couldn't get out fast enough. So they're telling me what's going on. That's why I always look at the A shares when I look at China. That's why I always look at those A shares. And it says it right here, A shares. I mean, it's not rocket science. It just makes sense. If a country and their citizens don't want to own the stocks, the question becomes, why do we? So when we see this and we have that uncertainty, and then you have the uncertainty that you have in France right now, we're starting to look at this, and also we're seeing how weak that the UK is getting, which is not really that big on global GDP. But when we start seeing them not need copper, when they're not trying to go out there and buy copper names, when they don't need copper, it's a problem for global GDP. And from a recessionary standpoint, it's kind of interesting because can you have a recession in other parts of the country in the world, like let's just say China, for example, or what's even going on in South Korea right now, and can that reflect onto us? And can Taiwan still do well because of that? And if so, does that mean we get cost of goods cheaper? And that means that our GDP is going to rocket, and then profit margins are going to go up. It's actually a fascinating time. I know I sound like a nerd, but it is. It's a fascinating time. This is a concern, though. So this is something that we're monitoring, and you're seeing it in the steel names. You're certainly seeing it in the steel names. X obviously has its own set of issues, but Cleveland Cliffs, I'll say it, fell off a cliff. But we just want to watch it. It would have been funnier if it was actually the name. Wouldn't it have? But Cleveland Cliffs, I'll do it again. Fell off a cliff. All right. But the second thing that's a concern of mine is this, MSTR. Now, we had really, really good news. You got added to the NDX 100. Everybody kind of thought it was coming, but you are holding this key level. But Bitcoin's up, rocking and rolling, right? MSTR is down. So we have good news, great news actually, and the stock's down. Now it's holding a key level, and I'm going to have you look at the key level with me because I love when we can do stuff together. And there's that peak VWAP, right? And you bonked right off of it. And this is why you always use peak VWAP, because you want to just see where the players are at from that key level. Now what's happening is you've bonked here, here, and here, and here. Here you tried to test it. Here we tested it, rallied, fell through. Tested it, rallied, fell through. Tested it. Are we going to hold? I don't know. I don't know the answer to that. I will say that you basically had like 30 unanswered points of selling today. And when you see this kind of stuff, you want to pay attention to it. You got right to that 444 level that's up here. You actually never even made it there. You got to like 38, and then you just fell off a cliff. And that's the kind of market you're in right now, and that concerns me. The other thing is PLTR got added, and they couldn't get out fast enough. And then you even had good news. It was just straight selling. When I see that, it just makes me want to put on the brakes a little bit. Maybe when we get through FOMC, which we'll cover tomorrow morning in the public pre-market video, maybe that'll give us a better understanding of where we are, and then we'll plan on how we're going to go into FOMC the next evening. That is it.